What's up, everybody? In today's video, I'm going to tell you why the stock market is rigged and why you should not invest in the stock market. So let's get into it. My name is Troy Kearns. I own over 350 rental units in real estate, and I have been a real estate investor for the past 20 years. Prior to that, I had been in the stock market for 24 years. So I understand the stock market and how it works. I have read hundreds of books about the stock market. I've read anything from Peter Lynch's Learn to Earn, Warren Buffett, Rich Dad, Poor Dad, on and on. I've read hundreds of books. Security Analysis by Benjamin Graham, the guy who actually taught Warren Buffett about value investing. And I wanted to talk to you why the stock market is rigged and why you should not invest in it. In fact, if you are investing in the stock market right now, comment below. If you're not investing in the stock market right now and you're thinking about it, comment below. I want to know about it. And I want to tell you why it's a silly idea to even consider investing in the stock market, because it's freaking rigged. All right. So why is it rigged? So first of all, did you realize that when you buy a stock, when a stock goes public, it's a company, right? And that company, let's say it's Boeing, right? And we're not knocking Boeing or anything like that, but let's say it's Boeing. When Boeing is a company, the reason that they go public is to raise capital. So if you are buying stock, what are you buying? You're buying debt. So right then, you should understand when you're investing in the stock market, whether you're buying shares of Apple, whether you're buying shares of Google, whether you're buying shares of Amazon or any stock, you are financing their debt. Okay. So what does that mean? It means that they are not making money right now, and you're actually financing their debt so they can grow. They need more capital. So they've gone to the public and they said, hey, we're Amazon, we're Google, we're Apple, and we're going public, right? Because prior to that, they were financed by angel investors. They were financed through other means. And now what they're looking to do is they're looking to pay off all those other investors and go public, right? So they're going to raise a ton of money through the underwriting process of going public, right? You right then know that you are financing debt, right? Now, if the company's good, they're going to be able to pay back that debt and then give you a return on your money, right? That's how it works. Well, that is how it works. But why is it rigged? Well, I brought my computer here to show you exactly why it's rigged, because I didn't think you guys would just believe me talking about that it's actually rigged. So one of the biggest reasons that it's rigged, if we look at Amazon, we're going to be able to pull up everything about Amazon, right? So you can see that right now Amazon is trading for $3,200 and change, right? It's almost $3,300. So we're going to go through all this right now. You can see the previous close, the open, the bid. That's what they're trading for. The 52-week range, which tells you how low it went and how high it went, the average volume, which is the number of shares, and the PDE ratio, which means the price to earnings ratio, the total market cap, which is how many stock shares are existing and what are they worth. It's 1.6 trillion. And then you go through a bunch of different things, right? What I like to look at is, if you look at that, that's just your summary right there. And then you could look at your statistics, your conversation, your historical data, your profile, your financials, your options, and then your holders. I like to go into holders here, right? And if you go into holders here, you're going to see that the top institutional holders are like Vanguard, BlackRock, State Street, T. Rowe Price, all these guys, top mutual fund holders. If you don't know what a mutual fund is, they're rigged too. Don't buy them as well. That's just a company who buys stocks, right? So when you're looking at that, you go, that's crazy. Now, what I like to look at, you see right here where it says insider transactions. So we're going to look and we're going to see that this guy who's an officer, Adam Selipsky, if we click on him, he is selling shares at X number of dollars per share, right? He's just selling all these shares. How much did he pay for them? Did he pay the same price you paid? Did he pay $3,200 for them? But he sold them for that price. Did he pay that much? The answer is no. The answer is he got them given to him for stock options. And that's the whole point here. So you look at David Zapoleski. He got 103 shares, a stocked gift price for $0. He paid $0, okay? So let's click on his name. So he got those shares for $0. You can see that right here, stock gift. But right here, he sold almost 1,200 shares or 1,199 shares for $37.50 a share. I wonder how much he paid for those. Look, another stock gift. You got 29 shares here. Another stock gift. All right, so do I have you yet? Do I have you going? Are you wondering, why is this guy getting free shares and you got to pay for your shares, right? What's going on? Does this happen just with Amazon? Let's check out another company. Oh, let's see if we can find Jeff Bezos real quick, just because everybody probably wants to know about him. Jeff Bezos just got almost 5,000 shares for $0. This is what Jeff Bezos just got. So they just dropped 16 million bucks in Bezos' pocket for free. So he didn't pay for that. You paid for that. If you're investing in that stock, you paid for it because it diluted the price of the share. When he gets free shares and you pay for your shares, you're paying for his shares too, right? So that's important. Whoa, you thought that one was crazy. So he got that one on March 2nd. On February 11th, he got 31,365 shares, or 102 million bucks. He got that for free. In December, he was feeling pretty good, so he got 65,836 shares, or 215 million bucks. Right? He's getting shares for free, and then he's selling shares for money. Does that sound like a Ponzi scheme to you? Does that sound like a rigged system? Because it freaking is. He's getting his shares for $0 freaking dollars, and you're paying $3,271 per share for a share he pays Zippola for. And they're not just giving him one share, right? They're giving him 65,000 shares, or giving him 100,000 shares, he's giving himself as many shares as he can get, right? So that's why the stock market is completely rigged. You cannot compete on a level playing field. Imagine if I was to tell you that I pay $0 for real estate and you got to pay full price. How are you going to compete with me at the same level if I'm paying nothing for something and you're paying full price? So if I'm competing as an investor, right? If I'm an investor in my company, just like Jeff Bezos is an investor in his company, right? And here's the other thing is, how many shares does he get? Do we know that? Are you reading through that prospectus that they mail you, right? When you invest in stocks, are you reading through that prospectus that tells you, like in 200,000 pages, that he's given himself 1 million shares this year? Are you reading through that? You're finding that out? Do you know what insider deals that he has? So there's a bunch of insiders, right? There's all these insiders in the stock market. You're not one. You're an outsider, and you're trying to compete like you're an investor. That's why the stock market is freaking rigged. Because as an investor, you have to be able to look at your shares and say, hey, I know that I'm buying X number of shares. There's X number of shares outstanding, but whoa, there's all these shares that these guys are getting for $0. How many guys are getting $0 of shares? Let's look into it a little bit more. So if we go back, insider transactions in the last 6 months, there was 1 million sales, okay? So the total amount of shares held is 50 million shares, right? If you're competing in the stock market, if you're investing in the stock market, did you know that, first of all? Comment below if you knew that there's a bunch of guys who are getting free shares. And do you compute that into your formula when you're investing? So now that I've told you that the stock market is rigged, you might say, well, Troy, I get it. You know, these guys got to get paid for their sweat equity, and, you know, that's fine. I can price that in. I can do my math there, but I still am going to invest in the stock market. Let me continue to tell you why it's not a good idea and why it's rigged, okay? Have you ever heard of the company called Washington Mutual? Washington Mutual was one of the largest financial institutions. And I want to pull up Washington Mutual stock right now. And I'm talking about this because I am actually a longtime holder of Washington Mutual stock. I was a longtime investor. When I first started investing, like I told you in the beginning of this video, I've been investing for a long time. I actually bought my first stocks before I was even 17. I said it the other day that I was 17, but my Aunt Kathy had got me interested in investing. She had an investment club, and what they did was called a DRIP. A DRIP is a dividend reinvestment program, right? And what it does is it reinvests your dividends, right? So a dividend is a cash flow, which is basically nothing from the stock, and what you do is you reinvest that cash flow as a dividend, right? And the thing about Washington Mutual is I had held that stock for such a long time because I bought it as a dividend reinvestment program. I had it for at least 10 years. So I'm looking at my accounts like I do every month, and I'm going and I'm like, wow, Washington Mutual is down to like $11, and it was at $16 last month. What an excellent value. And this is in like 2007, 2008-ish. And I'm looking at it and I'm going, wow, what a great value. And then it drops down to 6. Well, it's a better value right now, right? This company's been around since 1880 freaking 9. I mean, this is a great value, right? So I bought more, and then it went down to 3. And I'm like, can this thing actually go down to 0, right? Have we actually ever seen a company go down to 0 besides one that's not involved in like fraud and whatnot? Has that ever actually happened? Well, wait, it happened twice in this time and age. So not only did I get completely screwed because my stock, my paper, my piece of stock, my shares went down to nothing. All the money that I invested went down to 0. But guess who got my shares? And this is why it's rigged. Do you know who owns Washington Mutual bank accounts right now? It's called Chase. You guys might have heard of Jamie Dimon, right? The infamous manager of Chase. Well, guess what? The FDIC seized Washington Mutual and they gave it to Chase. Like, I know that because I had a Washington Mutual bank account. And when my Washington Mutual bank account closed, Chase goes, hey, no problem. Nothing's changed. You're still banking at the same great place. We're now just called Chase. And I went in there, I withdrew my funds, and I put it at Wells Fargo, which is really no better. But I at least moved on from dealing with Chase. So Chase got a gift. They got all of the stockholders' money from all the companies was given to Chase, right? Let's see if they paid anything before I say that. So JP Morgan Chase acquired all of the banking operations of WAMU, including $307 billion in assets, $188 billion in deposits for the price of $1.9 billion plus debt assumptions. I didn't get anything. Who'd they buy it from? Well, the stockholders didn't get Jack Ola. I can tell you that right now, unless they were the insiders, right? So that's the biggest deal right there is if you are investing in the stock market and you're not an insider, guess what? You're an outsider. And that's why the stock market is rigged. I hope you enjoyed this video. I hope you understand why my opinion is what it is. If you're investing in the stock market, don't do that anymore. Subscribe to this channel, share this video with a friend, share it with somebody that will help out, give us a like and give us a shout out, and definitely get started investing in real estate. We'll check you on the next one. Peace.